like a little springboard.
Yeah,
Pretty good day.
exactly.
I was kind of doing stuff and watching, just watching my phone and stuff. But it's like, uh,
Basically,
sorry, I'm mumbling here.
no worries. Basically, with this move here, I was suggesting that it wouldn't get all the way to the B point initially. We got to watch out for a fake break. Like this line also ultimately broke and it shot up to 16,000 because 16,000 is a very controversial level. But ultimately, that break and all of its move is subject to being taken back. And not getting to the B points initially has been a theme of the day. And effectively, we've got three in a row now where we've managed to rise on W's essentially to the point where we've left this major pattern untested, this untested, and then this one being a very small, shorter term version of what we did down here.
This high since the 11th of Jan 2022.
Just remember, oh, sorry, I'm just typing from, I was just making a post about this on the 31st of October, right here. This day, right here. Sorry, I'm gonna make a post about that. I'm actually going to post a few. This one, posted that there, 12:42 on October 31st. That was the day that I said this. New highs again, you know, and I was looking for it to change. I was like, I expect this. I'm expecting us to start to get less pullbacks and more than up than sideways. More up than sideways. And we never saw up than sideways in this entire area in here. It was all down, 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 down. And especially, I was like, I expect this. It doesn't have to change for me to anticipate the new environment. The thing that we have seen over and over and over again starts to change, and not because it had to show us, but because it was expected. Keep control. The plan is clear. You know, beware of a short squeeze again. And like, there's so many different opportunities as well. Like, I'm just seeing in here on October 31st as well. I was posting things like this where it's like, hey, clear zone here. Every seller is about to be made into a buyer from what I can see. A negative response to the red yellow line is common before breaking it upwards. I don't know how much more clear I have to be there, right? So, and then when it was, I was like, literally, you know, all of the downtrends were just fake breaks. Everything was bought out again. And that was the day that I said to go AMD as well. And after that, on the 31st, we were looking at AMD's earnings. So right after the bell, everything like got smoked down to this level. I was like, watch for the entire dump to get erased on AMD at 417 on October 31st. So fighting till the end of the day, right? And then I said, just for confirmation, it may take some time, but the Nasdaq should follow also at 418. A minute after I posted that one. And then, you know, what's funny is the next day would begin. And I specifically said, the next day, so like this is November 1st, just like yesterday, oh, if you were in, oh my goodness, just like yesterday, if you were in from the day before, the task at hand is to find a hedge for the long trades, not to give them up. And like later in the day, you know, we're still focused on November 1st. There, hedges. Focus on hedges back down. Consider taking profit if you have hedges, you know, on that as well. Because that was a move that happened like this. Where it was up, hedging back down. It was literally back down in a second. Then the next day after that, the day opened, you know, and we're working on November 2nd now here. So like we're talking about all of these gains in here now, still all of that up there. We're roughly halfway through the move, looking at trying to get through this medium bar. And a day where the slow chop is in anticipation of Apple earnings may not be as stimulating to the mind as many would like, but honestly I've taken off about a dozen green dash lines already. For what it has moved has been clear as day. Also, if you avoid every time you find difficult, how will you ever learn to make it easy? Also, understanding the short-term levels can come in handy when the report comes around. The play is the same as yesterday. If you're long, like I said to, then you're interested in finding a hedge. And if you have one, we wait for it to get knocked out and for the core to advance. And basically it's just about looking for hedges. Under no circumstances did I say to cut it. I said people should be at a minimal up here when we're holding through the weekend. It shouldn't be like a huge position like what was down here, because you should have taken off profit as we go. And now we're looking at hedging whatever's left and keeping whatever's left for in perpetuity. And I'm like, and that was on the 31st. Like it's not like on these days we weren't interested in going long. Like, let me find out what was going on at the end of October 26th on 2023. I'll figure it out. October 26th. October 26th was Intel earnings, Amazon earnings.
Kind of just took off.
Hmm?
Just right after that, it just kind of took off then.
Mm-hmm. So October 26th, it's a really interesting day. We're going to start out the first post. Very curious. So the first thing I said on October 26th was a long trade. In the green zone at the 188s, the break of the downtrends in this area could lead to the red zone above. Red zone above was hit instantly. All the B points hit off the green zone were in the red zone. Keeping a stop safe at the extreme low is key. Finding a hedge is the next play, and Amazon earnings today. Once, if you took a hedge when I posted on that on that last chart, the B point has hit now. A new trend forms. And it lingered around that B point. Any hedges that were in play are still just chilling at that point. That was still, yeah, Amazon earnings. This is the red yellow line. We're interested in finding exposure to the break of it because we want to be long on that day. That's the deal. And then at the end of the day, when it came to oh no, it's not the end of the day, it's 12. 12 o'clock, we were looking at Amazon. Amazon on the right too, both working towards the downtrend. And they're working out a fifth wave I was talking about here. Like a fourth and fifth wave forming now. The distance on the Nasdaq is very equal right now, so you can see the distance on the top and the bottom of that range, influencing its ability to try and get back up and test that range. And then it started breaking the trends. Then Amazon hit the green zone. The green zone was acquired, or the B point was hit on Amazon, and the green zone was acquired through the trend breaks. The distancing was equal on both sides. It didn't go a point more. Amazon, well, maybe a point more, but whatever. Amazon hit the B point, as you can see. It's at the 50% right now. The Nasdaq hit the green bar, the same distance below as it was on top, and same distance below the green as it was above the red, as you can see with my triangles. And then here we have the Nasdaq hasn't hit B points yet in the green zone above, the blue line getting a test from the underside, as you can see. And update on my other chart also, notice we're crushing the B points, a 5-wave move that's never stopped. So it just continues up. So anybody that still has that exposure is still on that. And then we got we're coming into 234. I posted this right after. We basically met the equilibrium. The entire market came to that point that it started at. The equilibrium has been met. All B points, all profit targets have been cleared. The next B point is much higher outside of the range. I was looking at this one all the way up here. After the break of every trend on the chart, Amazon earnings at the close. The red yellow line's clear here. There's another red yellow line in there that's even more important on the daily red yellow line. And then I posted how clear Amazon earnings was in the past. I showed a video on it. And then 332, the move continued to get stronger into the close as the close was approaching. And I literally was like, when I was talking about that, I was literally like, AMD is bullish too. Oh, whoops. Copied the same picture. I was like this. I was like, AMD is bullish too. We're just checking it out. It's projected the move to get to the other side of the range, just like we did today. Just like this, right? Look where it was right there. Absolute precision. Tesla was the same way. Bounce off the green zone. Deja vu. But it will all go unrecognized, as if I don't explain it, nobody will know it even happened. And then at the end of the day, you know what happened with that Amazon move at 4 o'clock, right? Oops. Amazon managed to tank all the way back down to its B point. And anybody that caught that equality was put to the test by a 78% retracement. And what I did with that was I put the Amazon earnings exploded off of this point. So we could see that, it was interested in a 61 here and it bounced off of it. And I was like, hey guys, look at that 61 up there. That's really attractive. And I wanted that one as well. And then we can see that 61 was blown out of the water. I was like, watch for a retest. And watch for a retest of the blue and yellow line. what I said in the next post. Watch for a retest of the blue and yellow line. That line right there. And then it came all the way back. All the way back down and crushed right through that entire blue and yellow line. Now a test of the blue bar is inbound. Beware. And I made that here. We jumped back up again, and I was like, hey, we're gonna come back down to that blue bar and test that blue bar. And basically it was like this. Like that. Notice it's testing the blue bar. With absolute precision, it was able to come down to the target yet again. Every target that I put on Amazon earnings was cleared. And I mean, at what point did they take the position away if you were meant to hold it? You know, and this was Intel as well. A good hedge point on them too, beware. Same kind of idea with the blue bar. Intel. Back to the blue bar shortly after I posted. And I was like, Amazon used its blue bar recently too. Because it had respect for what I had to put down. And I looked at that as a resistance barrier, the market respected it. You know, so I have a lot of respect for that. And then towards the end of the day, or sorry, that was the next day of Amazon earnings. It was literally moving like that the next day. That was the pre-market cutoff point. So the next day it started moving there. And I mean, under no circumstances did it ever come below that day. And then that held into AMD earnings, that held into Apple earnings, held into all the earnings after that. Never came back below that day, because that day was here. So I mean, like, it's all in the chat. It's all literally recorded. And I am making a video on it. It's just killing me.
I could never do videos of any sort. Like I even like doing videos for students. I always found hard.
It's just tedious. Yeah, it's
I
tedious.
get really self-conscious and like delete stuff. I'm like, oh, I said that funny. Then I go back and try and restate it, and then it's never the same. Yeah.
Yeah, I do that too. I do that too. And it takes me so long because I'm like that. Because it has to be done perfectly or I can't release it.
Yeah.
It has to convey the message in the way that I want it to be, heard. And it's hard sometimes. But it makes it easier when I can, like, it's not like I'm making the pattern up and going off of it. It's literally all recorded, and all my videos are like, hey, this is the live example as I'm teaching what this means, It's not like, here's my drawing of what this pattern's supposed to look like. Now go find it. It's like, I'm like, that's what the internet does. I'm like, well, at the end of the day, it's like, this is a head and shoulders, Good luck, go find it. And I'm like, when the market does it, it actually looks like this. And it's like, oh yeah, okay, but I see it in there. Like easily, you could say that it tried to make the left, the head, and the right, and it came down. But I mean, like, there's many other times where it did that same kind of pattern, and it offered a completely different result. It's like, hey everybody, I'm working, it's just destroyed. And I'm like, well, that's tragic. It was even higher than the other one. It failed even. It failed. The other one didn't even fail. I'm like, well, quite interesting. Because they always make it look perfect too on the internet as well. They never show you like a butchered one like this. Because debatably, the one that looked more like the internet one failed more. It was clearer and it had less of an impact. The one that was kind of like, it required you to squint a little bit and maybe be on the fence about, you had to really know it was going to come off. And I mean, it was the first response to a green zone that we've had. It's over years old, and I mean, like, I just know that like there's a very good chance that it's not the individuals that understand this as a barrier, but the institutions that were trading here over 2 years ago. Because they were responsible for this range when they made it, and they remember it. Just like they made something and they returned back to that thing that they made. It's like, we can expect that they know everything about it. And when I can see things are used, like I'm like, how do we break down barriers? And I'm like, oh yeah, no, we just use that method right here on this barrier with absolute precision. Ah, that's just everybody understanding the barrier, right? I'm like, no, 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 no. It's a singular entity with 80% of all of the money. 80% of the impact as well.
Hey, I gotta head out, my man, but I'll catch you tomorrow.
All right, man. Take it easy.
Yep. Have a good one, everyone.
Too, man. Yeah, it's definitely pretty slow up there. At the end of the day, it's been very commonly making He drives patterns, and we've got 2 so far.
Stuck at 261 too to that B point down below. 1213. What do you have? Your green lines there?
The B points, you mean?
Yeah.
Right on. Two o'clock may have a change in volatility after all. This hour has been dead. What it has done is acknowledge the red zone from above. And there's a beep above. It's actually the smallest range here too, eh? Like you'd be surprised. Like, does this area want to get a grind? Like, what are the odds we don't grind it? We don't get into this. I think it's very likely that we end up doing it, regardless of what happens here. Regardless of if we even come back to this point here, whatever we do out of the bottom of that green zone is probably going to be seen out of the top of the red zone. So it's very hard for me to think it's bearish here, even with a big dump. Like, it could take this whole move back and grab those B points. I'm still bullish. So it means don't drag your stop up into this move whatsoever, or inside the green zone whatsoever, because it's not safe. Just in case the range does get used, it's far easier to look for a trade that goes back towards the green zone once we get to the red zone, or once we get to the barriers. You know, we have to understand that the name of the game today, it wasn't to give the long trade, the best long traders, the best traders in the world, a long entry. The market today woke up expecting you to already be in. There's no ifs, ands, or buts about it, because it literally offered the people that already held more money than anybody that bought today. So it's like, at the end of the day, it wasn't for the people to buy today. Because think about how this entire move started and what it looked like when it turned around. That was the time to buy. The 24th or the 28th, the 20, you know, at the end of the last month, essentially, or it was 2 months ago, really, but almost 25 days. It was actually, now that I remember it. But yeah, regardless, the dates and specifics, it doesn't really matter. The fact of the matter is the move is there was one way to see it, and the right way was in the chat, 100%. And the whole move, like to stick by it the whole way, like to say to continue to hold, continue to hold, continue to hold every single day. Profound. It's up there. Because when I look back, I'm like, what is a better strategy? I mean, like, if it was to offer that same thing again, should anything be done differently? No, is the answer. That's the beauty of it. Not a single thing should be done differently. So is it the best way to trade? Well, I'll tell you one thing. That's not a trade that you're going to be able to repeat every day. It's not a trade you're going to be able to repeat every month. You'd be lucky to find those same ramifications lining up again. But because we found those ramifications for that trade, the odds are good that we can find the one for the next. And it's not by using the same cookie cutter strategy, but by understanding the environment and its variables, and to be able to come to a logical solution, just like any other professional in their line of work. That's the same way. Like a process. And it's like, no matter what profession you choose to do, it's a matter of learning those variables to the point where you can remember them off the top of your head. You don't need to look at the book or nothing like that. It's like you understand them so well, you understand the results of those variables and what they mean for you, and how dangerous it is to not understand the situation before you take action. You know? Couldn't have said it any better myself. profession you choose to do. It's a matter of learning those. Market is pretty slow right now. Obviously, we can see that the change of the hour is coming up. We've got 5 minutes. Now, of course, we can see that there's a kind of like a method that it's using to get to advance through the barriers that it does present. So far we've been kind of rising on W's, but the W's haven't been playing out, which is interesting. Funny enough, there has been some W's that have played out, but only since we've been in the green zone. Like if you think about what happened here, made a W, and it ended up playing back out to its target relatively quickly and swiftly. Of course, it's a small pattern, but one thing that it's done that no other W's managed is to actually test its B points. Could say that there was one in here as well, but kind of wonky. Variable. Yeah, I posted a clip in the chat there of that sentence that I mentioned on that move, essentially. $1. Trying to see if anything else is
$80 sure tanking against all currencies.
It's a big triangle. SPY. Dow. Nasdaq. Got a lot of respect for how it uses the range support, conquered the resistance. All levels that it's already used in the past. How much trouble did it take to get through that level, get into it, pounding it and pounding it, putting everybody to the test, and then finally conquering it after trying to and failing. People must really want it at this point. But to somebody that's already held long, all of this unnecessary. You don't have to catch any of it because you're already in. So it's not difficult for you because you've decided to keep the right strategy. That's the idea. And like days like today, you know, they're leading into the previous trade's success. It's like it's not a matter of the people that make the most money in the market to be in and out within a day, but to make these huge moves and to take every single penny out of them. And the next thing that they get involved with is not a maybe. That's what's interesting is like the individual's like, but it has to be a maybe, but there has to be some uncertainty. There just has to be. I'm like, well, you keep believing it and it might formulate for yourself. I don't believe that there has to be action taken on uncertainty ever. You know? And if you're not in line with the market, then that's the repercussions of that is losing money. But it's not because of trading in a random nature and not being absolutely intended on being in the position that you took, and you know, understanding the risks of that position and the reward of doing it successfully. And sometimes, you know, what's funny is the market does this for everybody. You know, right now, it doesn't matter how much money you have, you can't avoid the fact that the market's only giving you a 10-point range. It doesn't matter how ready you are, right? But do you settle for this just because you're ready? Because I tell you undeniably that this area is crap and it doesn't offer much, so why settle for it when it clearly has better things to offer? So it's like, just because it's offered better things and all it's dishing out is crap doesn't mean you have to eat it. You know, like literally. That's the quote of the day right there. You know, just because it's being served doesn't mean it's you know, you have to find value in it. Because it is undeniably not doing anybody any good for anybody that is part of it, you know? Like I say, we're not trading binary options here. Sideways movement is not profitable for anybody. And when it's like, you know what? I'm going to spend an hour at this exact price level. I mean, how many times has it done that today? There's like 3 hours here almost that we've spent an hour
It
at.
just goes into these sideways, right? For about an hour each one of them.
Yeah, right? Literally. Like, lock it in for an hour. We got to go to lunch.
It doesn't give much for the short and it doesn't give much for the long.
Oh, no,
You
it's
know, so just
terrible.
trading within that.
Oh, dude, and you're trading
all-
futures. Imagine if you're trading stocks, it's just terrible. Like, you'd have to put so
Oh.
much money into it, and you're lucky if they even get you filled all the way, you know, just for your $60 or whatever you're trying to get. Be lucky to get a couple $100 out of a $30,000 trade there. And that's just like, you know, what if it tanks down and blows through your stop? You know, that can happen if you don't have a lot of liquidity. If everyone sells so quick that, you know, your order is the last in the chain and it doesn't get filled until $10 later or something like that. Possible. Futures contracts, there's so much liquidity that's like, you know, even if we tried our entire lives, I don't think we could obtain it. So it's like that's a reliable force, you know. Like the liquidity in the Nasdaq index, like there will have to be problems with the economy for that to be different. Or they would have to make some new index. What new index could they create? I don't know. Future index. They create some, if they had some sort of new way to make something we don't have right now. Could be interesting, but wouldn't that just be technology as well? I mean, like, I don't see, like, what other industries could we be in for in the future? That's hard to say. It's an interesting thought, though. Gets your mind working. But that's one of those $1,000,000 questions, to be honest. Because nobody would have said that marijuana would have been legal in Canada, clearly, or something like that. I'm like, what the hell? Of course it would have been. Like, look at everyone. I mean, like, you can't call everyone criminals forever, because everyone pretty much smokes it now. Like, it's clear everyone smoked it. They're not criminals. But that was an industry that was literally, it never existed, and now it does. I guess you could call it the marijuana industry. But it's nothing compared to tech. It's not like, I mean, sure, it is an industry and it didn't exist before, but will the next industry be as big as tech? I don't think so. Probably not. It'd probably be more like the marijuana industry. But you know, it has its time to shine, I suppose, and it'll shine again. I find it super weird, to be honest, that all those companies have really low stock prices and they offer a really good product where they have customers like literally every day, and like their product sells. I mean, like if they were a tomato selling company, they'd be making tons of money. What the hell's wrong with them? Like like that one company. What are they called? The evil company? Or I shouldn't say that, but you know, they artificially modify plants so that in the event that something happens to that company, that entire plant will become extinct. Monsanto's. Yeah, I'm not cool with that. I think that's evil. But because if somebody, you know, like we need to save those tomato seeds, you know, literally. If they can't sell you tomatoes anymore, your tomatoes won't grow seeds. Like that's evil, in my opinion. It should be illegal, personally, but I don't know.
100% agree with you.
Yeah. I'm like looking at like the Amish people now thinking, oh man, those tomatoes will be able to produce like seeds and everyone else will be screwed. What if Monsanto's goes under and they don't sell that product to anybody? Or if it becomes like, yeah.
What happens, and it happens all over the world, Monsanto and Frito-Lay with their potatoes,
Okay.
um, neighboring farms will become pollinated with their pollen.
Oh, just
And
like
then
as a coincidence.
Monsanto and Frito-Lay will move in and sue the owners of the farm,
Oh
and
yeah.
the farmers almost always lose the farm.
That's how I part of why I think they're evil as well. That was the cherry on top. Going after the little guy. Not
Yeah,
that.
like some indigenous subsistence farmer in India is breaking their profits. Thanks, Frito-Lay.
Yeah. Yeah, I don't know why everybody just can't leave everything alone when it comes to the natural way of the world, but yeah. Soon we'll be eating bugs because of it.
I've tried mealworms and crickets and
Definitely not my preferred go-to, you know.
yeah. Crickets and mealworms taste like peanuts.
Interesting. Very interesting.
Ants, the ones I had taste lemony.
Interesting. Interesting.
I think it's the formic acid that's inside the ant that makes it taste like lemon, but I don't know.
Yeah. No, I could go my whole life without trying that, I think.
My first degree was culinary arts, so I did all kinds of whatever, you know.
Oh, I guess
all
so. Yeah. If I specialized in that too, you know, you'd have to get a little weird with it, right?
Yeah. I don't think I could ever be like Bear Grylls, like pulling them
Oh
off a
yeah.
log.
Y-
And that's the limit.
You did remind me of that when you mentioned it. I'll watch it all day, but doing it's a
Right.
whole other thing.
My daughter watches this Choose Your Own Adventure show on Netflix with Bear Grylls, where you kind of like choose his path.
I
And
saw
it's
that.
like it's like that.
Yeah. Now there is a blue line. We're gonna come back to it.
Oh yeah, I like that one. It matches if you extend it back further. It goes along other highs, doesn't it? No, maybe not. Mine does.
Yeah. Because we had the same kind of thing here with this blue line. When it
Yeah.
loads in, where it was like across the highs of all of these levels. Then when it got on top of it, it essentially wanted to come back to it right away. And now we did like a bigger version of coming back to it on the bigger picture. And now it's like a smaller version of that whole environment up here. So coming back to it's pretty
Yeah.
pretty standard here, I'd say.
Oh, when you adjust your Z or whatever, it flattened out. It didn't look as it looked steep earlier.
Hmm. Yep.
Almost the same size, not quite, I guess. Oh well.
That's okay. It's still a triangle. It's fine. Honestly, it's like like I say, I would pick for it to do almost anything else, but
Oh yeah.
it's like it's when it gets to an environment where it's like even being right on it, it just seems to take energy from you and not pay you as much as you usually get when you do put your energy into it. And I'm like, well, God forbid it actually gives some decent moves and you don't have any energy left to take them. So I'm like, I've experienced that a lot with ranges like this, where I'm like putting it all in, and I zoom out, and I'm like, oh geez, it's just a freaking tiny little range, and I'm like, well, you get zoomed in on making the right trade all the time in there, and not to say it can't be done, it's just not worth it. It's just but at the end of the day, the one thing that would make it worth it for me is if I looked at it and I didn't understand it, but like, I'm like for what there is to understand, it's not worth the stress of getting into the position. Like, well, this is one of the things where it's like, hey, if you have a risk reward profile you're used to getting involved with, this risk reward profile for any move that's happened in any of these ranges here, the risk has been undeniably higher than the reward could have been. Because like think about how much you have to risk on the table, like when you put your stop out there and it could get hit. How much are you going for in that range? Like are you willing to make less than half of what you're risking? I mean, like that sucks. Nobody would take that deal. And I mean, like people are just taking it just because like this could be like the only day off that they have or something like that, and they're just like, I have to trade in this range. I'm like, oh, well, that patience would be better than the risk than risking it, essentially in a risky situation. But if you don't know what you're looking for, you're that much more compelled to trade in the bad area because you don't know what a good area looks like. So it's like then you easily most people would be caught in areas like this just because it's here, and because if most people decide to trade at some point, they're likely to land in the area where it spends most of its time. And ironically, that is not an area that profits most of the people very well that spend a lot of time in there. Usually the times that are the best places to trade, they spend a fraction of the amount of time that they spend in consolidations in the middle area. And it's like if somebody was to luckily place, like if I wasn't to look at the chart at all and I was just like, oh, you get one try, buy somewhere. If you click the button, that's where you pick, and you don't know where it is, where are you most likely to end up? Well, not on one of the wicks and spikes, probably. It's statistically unlikely for you to randomly buy at the best point than it is for you to buy at a point that's rather going to hurt you, which is ironic. But it is the case. It's like unless you know what you're doing, you're putting yourself out there to potentially, get hurt. And like that's one thing I used to say that's kind of harsh, but I was like, if you don't have a plan, then don't be surprised if the market makes one for you, and if you don't like it, well, that's the price of making a plan. You got to make sure that you have one, because then if something's going wrong with it, if you have to bail on it, yeah, you know what it's worth to be in on that plan. Is it worth the risk? And you've already said yes that it is, so you do one of those opportunities right, it should pay for the risks of the next two at least, the next two tries at least. So it gives you some flexibility. And that's what the first trade should always do. It's like whenever you open an account, is it ever the first trade that's supposed to make the profit where you're supposed to pull it all out? No, you're building a cushion so that you can make more money with the money that you've already earned, so you're not risking your own money anymore, but rather your profit. And at the end of the day, then you build on that, build on that, build on that. But it's kind of hard to not have it work that way, as well. So it's good to understand how it works, because it really does work that way. So but that's why I say it's good to start small and build up that cushion, because what you have to focus on is the fact that you're trading correctly, and it doesn't have to be incredible size, but you're building that cushion off of those correct trades and those intentional trades that you intend to be a part of because you understand the value in them. And basically, having done that multiple times gives you a little bit of a cushion, which, you know, can mean, hey, you have the option to continue growing that cushion, which is always a good option. I'm like, hey, you think your cushion's built, build it again. Now you got a cushion. All right. Now at the end of the day, that's fair, because I'm like, well, if you built your cushion by luck, do you really think like it's as sound of a cushion? I mean, you want to prove it to yourself before you go with heavy size. You know, do a couple cushions, build a whole freaking couch if you have to. Because when you fall back down, you want as many cushions as you can freaking have. You know, at the end of the day, you don't want to start out there putting yourself out risk and you have nothing to fall back on. Doesn't make any sense. So you start small, you build it up. You don't focus on the profit and loss. You focus on the fact that you're making right trades, and undeniably, you will start to formulate a cushion. It's impossible not to. If you're making trades that are profitable and they're building your account, you're building a cushion. And at the end of the day, that's it's really important. Hey, what's going on? Right on. Yeah, it's definitely grinding right now, but decent gains on the day. Also, apparently there's a way that I can make like a custom invite like for the Discord, and I want to put that on the YouTube. Like I just want to make that so that it's there instead of like some sort of weird jumbled up number, or you know, it's actually says Legatus Trading or something.
I've never done that myself, but it sounds like it can be doable, yeah?
Yeah, it is. It's one of the features. I just have to find out where setting is. It's okay.
There'll be loads of YouTube videos for it, I'm guessing.
Yeah, probably, yeah. I think I've done it before. I just
I don't think it should be too difficult.
yeah.
Interesting. On the 45-minute chart, we're about to hit the 261. On the 30-minute as well.
Hmm.
Oh, on the 15. Yeah, there you go.
On the 15-minute? Okay.
Yeah, it should be the 261, I think, as well on the 15-minute.
Nice. Yeah, I got a viewpoint up there at that 261 as well. The 361 is like the edge of my red zone, where there's also a viewpoint up there too.
My 261 is just a little bit lower. Maybe be like a wicked spike, I guess. 261 to hit the B point.
Okay. Term here. It's definitely getting closer to the point where could see some change. We're definitely getting closer to the overall trend line. Yeah, it is interesting because, no matter how much, or how ready you are for the situation, it's like when it does this, it's a test of patience, the way I look at it. Because it's no matter how successful you were with the previous environment, you understand that this environment is nothing like that one, and that the results of it can be also nothing like the previous. And, for a prolonged period of time now, we can see that it's offered people minimal that have been associated with the environment. Doesn't mean it won't lead to something important, but so far, anything that it has had to offer has just meant more of this environment. Now, we've managed to get out of the last consolidation by a little bit, and it could mean that we're on the brink of change. Of course, we do have another hour, change of the hour coming up. So, like the fact that the hour changes into power hour, the last hour of the day, it could increase volatility.
to hit the 161 as well from the bottom of that move, the bottom of the triangle as well.
Yeah, that one can go in there too. 161s have been pretty common lately, but not so much today.
Yeah, I definitely don't trust it.
Yeah, it's a good way to look at it.
Normally go for the 261 these days or the 288 300. It's a lot of good area at the minute.
Well,
Normally.
Yep, it's typically not just the fib itself, but because of the environment that the fib is in and everything that's related to that area that it's placed at. So some sort of confluence as well as the environment definitely play a big role. But the fib level itself is like it's not something that you can generate consistency on a prolonged period of time. Like if you took every 188, it'll soon catch up with you. Like if you took every 261, it'll soon catch up with you because like I can't even, you know how many 261s have failed in the past month? I can't even tell you, or the last month, because there's been so many. Same with the 188s. How many have worked as well? So many. Can't even tell you. So there's like so much failure and so much success off of just that level itself. It becomes, well, there must be something else affecting it when it's at those levels. It can't just be the levels themselves. Like how they get to the levels too is important. Not even just what's in the environment. Did it run at it? Did it coast to it? Did it grind to it? Did it chop to it? You know, like all of these different things. Like did it make a pattern to it? Is it part of a D leg to getting to this level? Is it part of a rising wedge or a right shoulder? Is it contained within another move or is it at the extreme? All of these things are variables. They all matter. Every single trade I think about them every single time. The more that you think about them, the quicker you can process them.
2 seconds.
Because running at something has a different impact than chopping to it. So we can understand that if something hits it with a lot of velocity, then it has a it might have used up all the energy to break the barrier and getting to it, and that's common. See that all the time. $241 from this fib set here down here too. You know what I like about this is that the old the 261 is the long term one is lining up with the short term, and the two short term ones are lining up here. But basically that entire area, because they're so close, becomes an area that's kind of an intriguing one. Between that red bar there, we've got this 261 and the other two at the top. Typically I'll make it like that color because it's all yellow levels that it's trying to highlight, so why not make the bar yellow? Now it's not super important, so I turn it down. Like it's not one of those lines that you would get where it's like this one or this one. But it's just a cluster of 261s. And in the event that it's used very well, it may earn itself the ability to become more valuable in the future. But lately we've been coming back to 261s from above. And the best place to do that from, in my opinion, is to actually go up and, you know, we can have some sort of pause at the 261, but go up and hit this level up here, the green, and respond negatively. And this move right here, that actually might be perfect. And basically that's the value of responding to the green zone. The less of a chop that we have, the more likely we get a pullback. You know, so if it chops more here, it's actually less likely to be able to get a pullback. If it chops less here and continues running, we're actually more likely to get the pullback there. So it's not a matter of so sometimes like people like to look for it to be like one size fits all, it's guaranteed, but I'm like literally presenting an ultimatum. In the event that it does one thing, I think about it this way. In the event that it does the other thing, I think about it that way. But until it does one of those two things, nothing is to be done. That's the idea. It's like this pattern. Remember when we look at an H, it can create two patterns. It can do this, which we all know, but it can also do this. Well, do we know that this is a pattern? If we wait for it to form, we understand what it can do. We know that this is a pattern. If we wait for it to form, we know that what it can do. But this, having the ability to do two things, why would anybody ever try to do that? Well, oh, it's a double bottom. Now, double bottom is probably the most failed pattern every single day. Not a day goes by where a double bottom does not fail at some point. Like what happened to this double bottom in here, and why was it necessary to make them fail before giving them the same thing at the bottom? You know, very interesting when I see things like that. Because it's like, oh, you want to try that again after what it just did to you? Well, if you repeat the same thing over again and try the same strategy twice, it's going to cost you money, right? Ironically, if they tried it again, they would have made money. Contrary to popular belief, the average individual is very likely to fall for tricks like that. They don't know they're being tricked though, so it's that much easier to trick them. You know, it's of course this is a B point from way back in the day, right? So we're gonna go ahead. I'll just turn that down actually. I still want to remember that it was there, but it's old. And that's what that tells me, is that it's old, dark and hard to see. If I make it dark and hard to see like that, it's typically because it's out of use. Something is bright and visible, I definitely want everyone to see it. And I definitely don't want it to go unnoticed, but the less noticeable I make something, the less relevant I find it. Yet it still can be, you know, there, and I'm considering it a little bit, but it's on its way out kind of thing. And I'll turn it down. Or something that hasn't really shown its full value yet, that potentially could be really valuable, but we're looking at it to see if it can actually create a level that actually becomes something of significance. And ironically, what I think this level is going to be used for is squeezing. They're going to try and get people to pay for the green zone. And I don't think it's going to work. So it's going to cause a battle between the gold bar and that green zone. So whoever's pushing the market right now doesn't understand that they're going to struggle when they get through this 261. And it will have to come back to the 261. Maybe they do understand. Sure they do. But at the end of the day, it has to work like this. So in order for the process to be as it should.
Just noticed as well, it came back to test the 1600, right? Looks like it did as well.
The 1600? Oh, or you...
It just looks like it came back to test it, like the general price.
Yeah, definitely. Yeah, this consolidation here was all around that 16k level.
So that's the top of the red bar then, right? Great gold zone as well.
Yeah, there could be like a little bit of a discrepancy on 16k depending on what security you're looking at. But it is right around that 16k area for sure. Now you want to know what's really interesting to me is when I place a marker on the end of the day, and when I place a marker on the imbalance, right? What this does is it tells me that it's a matter of mathematical fact that by the time that we get to the end of the day, the current short-term trend will have to break if we're to be underneath the gold zone. So it's an ultimatum. Between this gold line and this gold bar, how do we hold both of them for this time? Is it physically possible? Well, no. By this point right here, one of them will have to break, and it is a fact. So we will have to be, we're going to have to live through one of these things breaking. It's about, unless time freezes, but how would we know? At the end of the day, it's like, how can you, or unless the market halts, which is like less than 1% chance, God forbid something happens that makes the market halt, that's terrible. But the end of the day, it's unlikely. So with the market unlikely to halt at that particular time, we have to understand that one of the barriers is going to be forced to break as time continues. So what could be the repercussions of having broken a trend like this or having broken a resistance barrier like that? Well, I'll tell you one thing. We get through this bar, we test it from above. Appropriate place to test it from? The green zone. Could it have something to do with the imbalance? Yeah. Well, just remember, how do we make it through green zones? What could be the repercussions of getting involved with this green zone? Let's take a look at some of the other ones here first. So do we not recall in this instance with just the most recent green zone, we ran into it and then it took a hell of a chop. Does everybody it's like, how do you not remember the chop? At the end of the day. So then I'm like, all right, we saw before as well, smaller version almost. We came up to this green zone, smashed it, right? We felt it though. And then we grinded it. We built all of this node there, so it must have done something there, right? It stands out amongst all other nodes as a node by itself and a node that sits below the green zone, just like it did here. So it's almost like there's a way that we deal with the green zones or a way that we deal with the barriers. At the end of the day, this is not the first instance that we've seen this. Because I've been saying, how do we deal with green zones for a long time? And when I say that, it insinuates that we could put a siege node on one of these levels. And I call it a siege node because it throws everything it has at this barrier until it gets through it. Rarely they fail. But sometimes it can take a long time to create what this looks like a siege node, right? Well, it is a siege node. And I say this because what does it do? What's its purpose? Well, it grinds the green zone so that when it hits the red zone, it's got something to come back to. It's not a matter of it's constructing the groundwork for what is to be the support. If it's supposed to be a support, well, maybe not everybody's been around for 2 years. Maybe not everybody understands that there's a range here that's over 2 years old. Or maybe they did, but then they removed it. Maybe they're on Pepperstone and it disappeared. You never know. At the end of the day, it's just like it's like so many things can happen. At the end of the day, we are coming up into the middle of this large long-term barrier. And what it is going to convince people to do, undeniably, is to put volume in an area that used to be the middle. Just understand that as well. Because I'm like, are they tricking people again here? Because the real place that they like to bring it down from was the red zone before. And you're making people into volume out here in the green zone, building a siege node out here in the green zone. They did one on the bottom and on the top. You can see that the relationship that they had with both of these lines that were otherwise barriers in the past. This one wasn't designed as a barrier, but you want to know what's funny? Is it was sure used as one right here. I can prove it. Well, I showed you right there. It was, hit it and it came down off of it. There was nothing else there but that thing, right? So I'm like, well, that thing, undeniably, it did have a negative response to it. And then once it did have that negative response, it came and stepped on top of it. By how much, though? And it stepped on top of it, right? Because that was a method of conquering its advancement. And it did it like this. Suspiciously particular. No? conquering the other side of the range? It was even the same time and everything. Or is that just the work of the public? All unanimously trading at the same time, making it sit in the same range. I don't think so. Awareness of the same level with absolute precision. I just can't believe it. Can't believe it for 2 seconds. But the work of professionals. That's what I see. Undeniably, though, this is probably one of the most controversial end of days that we've had in a long time. What's happening tomorrow? Does anybody know? Because if there's some sort of news event tomorrow, I just kind of want to know. Let's take a look. RBA meeting minutes. Oh, hold on a sec. It's not cool.
No, it just says FOMC minutes. That's it.
Yeah, I was gonna say, I'm like, that's
And
just
that normally has no effect on anything.
Yeah, because I'm like, what? Did you miss the meeting? Because the minutes
Yeah.
they just go over it. You know, same thing in yeah.
I think really till the end of the month.
What's that? Till the end of the month?
Like nothing really too much. I mean, you
Oh,
got the,
nothing till the end of the month, right?
yeah, maybe end of the month.
Interesting. Just gonna write in here because I just want everyone to understand what the deal is with this. 2.1% level. Yeah. Just getting a wider picture there. Kind of like a zoomed out version. I just wanted to put it in the chat there. I'll just like
Wonder how many people have gotten burned for shorts today.
ooh, a lot. Guaranteed.
It's like everywhere.
Yeah, because everybody thinks they're selling high and buying low, right?
Not if you look at the higher time frames.
Well, we're pushing an all-time high almost.
Yep.
So people will be like, it's a double top on the daily. Weekly double top. It could be the biggest M in the Nasdaq history. Nope. Or it could be the biggest second and the third wave. End of the day, it's wise to keep the positions from the extremes and manage them on the short term. No better way to do it. Right now, keeping the long, it's been straight up the whole time. We're almost getting this final major 261. We did get past the first one. So you want to know what's funny? Is out of all these 261s, you want to know which one failed first? It was the biggest one. We're coming down to use it as support right now. The other two are at the other side of the gold bar, exactly, well, roughly at the same level. But of course, with it being a larger 261, you know, it's okay for it to get a little bit of fuzz on top of it. It's just intriguing that it went, you know, instantly and just decided to go above it and stay above it and not offer anybody that traded at it anything. And I'm like, that's danger. I'm like, what's going on with that? I don't know. Tough. Now we've got maybe how much time before the ultimatum? You know, the 320. Wow, that's a bit of space right there. There's a hell of a lot of time. But at the end of the day, the gold bar will have to break and all the 261s will have to fail in order to retain the trend. But is this an area that's actually appropriate in the past for it to fail bearish reversal patterns? Well, after all, if we were to take this range from the way that it used to work from before, we take the range from the high to low, and we put a fib on that, where we are in that range right now is exactly in the middle, the 50% retracement. If I take all these smaller ones off for a second here, you can see that this range, it used to be contained, like our giant volume node grew into this area where the extremes were used, and anything past them was equal wicks and spikes that could have happened on the bottom. You know, in my recollection, there has been no like different nature to be able to use this area. Like whatever we spiked out the top would be seen out the bottom. Whatever we did on the green zone could be seen on the red. The chop in the middle is outlined by an area that could otherwise be used like this. So we could get a serious consolidation in that area. And the consolidation that we do get, whenever we get that consolidation, even if it's not in that area, wouldn't be surprised to see it that size. Look at that consolidation. Why is it that size? You know what I mean? It's like, what's up with that? But does it recognize this as a level or as a distance? Has it already made it into the average counter trend move? Because they understand the value. I understand the value. I see their work from before. I remember what they did here. I have a lot of respect for it. I identified it. And it worked really well before, and it's still working now, 2 years later. So this is the middle of the old range. If we rewinded back in the day, you know, and if we didn't have any perception of time, this would be right in the middle of the range. What's the difference from this being yesterday's range and a month ago or a year ago? It's not the high of the range. So a squeeze would be on the table. Contrary to popular belief, it's not worked out really well for people that have been shorting today, and that could continue for the entirety of the day until we get to my level. Like, I like the idea, and I'll say it again, of us coming down from the green zone to the freaking gold bar. That's my idea. I'm not going to complain if it shoots right through it. If it shoots right through it, you know what? The red zone holds that much more. That's the deal with that one. Super, 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 super precise, so we have to watch out. And what's funny is in order to get into this old range from before, I think that we're going to have a move that's as big as the range itself, and it will be the move down to the gold zone. And once we make that move to the gold zone, then it will double that pullback to get into this range. So if we did something like this, that would really freaking make a lot of sense. Basically, the one thing, I don't care about this move right here. I care about this move, and this move. Those moves. Mainly this one here though. Okay, because this is important preliminary movement to getting this. If this does not happen, this is not going to be the same. So we have to understand that those are the particulars of the situation. And it may not be something that you have to take action on, but just something that you have to be aware of. Something that can, you know, maybe you were compelled to consider doing something different in this area is being very suggestive of the need to pull this off. Now, there's a few different ways that it can do this, right? Is it possible that it grinds this area and shoots up and then has a negative response? Is it possible that it grinds like this? Can it shoot up right now and then grind there and then dump back down? All of those are possibilities, no? We gotta give it a break. Gotta give it a break. When it gets to the green zone, however it wishes, there's danger. Now there's some better ways, like if it ran straight to it, oof, that's even better. I like that more. Because it has less time to develop energy to continue. And when it does pull back, when it stops, I wanna see it struggle. I wanna see it struggle to even do this. So it's like half the time, half the movement, half the precision, more struggle. That's what that would tell me. And I'm like, well, what's wrong with your trend there, Mr. Nasdaq? Are you not able to pull off the same counter trend move and get up the same way that you were at the beginning of the trend? What's happening? You know, that's the idea. Like it's literally losing steam, and you can prove it, right? You know, and I'm like, well, where's your juice? You know, at the end of the day, this is what you've been giving at the beginning. I know what there was at the beginning, and it's not that. So I'm like, you can't fool me, right? It's something different, and it's a crappy version of what it has been giving. And I'm like, well, does that mean that, you know, it's like not many participants feel that making this move to progress the market even higher is that valuable anymore? Less effort is being put into it. And when it stagnates even harder, and so on and so forth. And it's like, what else does it change? You know, it's like, well, yeah, no, I always, it's like, it's like it's asking you, like, figure out what else has changed, you know, like, and what does that mean? What did that change mean last time it happened? You know what I mean? Because I mean, like, what if that situation is the same now? I mean, it pays to really remember it, right? You get paid a lot to remember it, so you want to make sure that very good to understand the relationship with the environment and these levels. And right now, I'm telling you, this area, it used to be 0 to 100. Where we are right now is at the 50, and I'm uncomfortable with that straight up. So it's regardless of its short-term attraction. If somebody was to just consider the analysis of today, well, hold on a second. Like, consider the analysis of today. At what point did we get from a 261 and go back to the 100? So why is it going to work now? That's another interesting question. Well, we are higher. You know, there's an argument towards why. Like, we are higher. We are running into new levels. We're making smaller patterns that are insinuating that our ability to do what's great for this trend is dwindling as we get higher. You know, and that's well, I consider that a fact. Like, that it is in fact getting crappier at being able to move up, because we're not moving up in the same speed and everything, but it is using the same kind of move, just taking a different approach to it. And I'm like, okay, we used to do this really well. You know, it's almost like, okay, give or take a little bit of a haircut, like I say on the top or the bottom there, it's absolutely fine, right? And then we get up to this area here, I'm like, why is it taking so long, and why doesn't it look so crisp? What was wrong with it? It was almost like it got better at doing it up here, because this was like a true up then sideways kind of environment. You know, it really went up, really went sideways, and then really went up again. So I'm like, yeah, that's what's up. You know, we can see that clearly. Like, it would be a very easy argument to win, right? So at the end of the day, what does it mean to get to this level? Is that not the green zone that we're supposed to get down anyways from? Interesting that the average counter trend pullback just seems to conveniently be this green zone to red zone. And if we were to do this counter trend pullback or this counter trend pullback, that would be getting to where? My gold zone off of the average move? Seems suspiciously particular. You know? So it's squeezing the crap out of everybody. And it's doing, like most people, when you look at what their strategies are, they're not to buy into a 25th day high at the very, very top, which is interesting because look at all the people that are part of this right now. Isn't there just so many people? No, nobody's here. Look at that. Everybody's been eaten alive. Everybody they've folded under the pressure of the profit because they checked the profit and loss and $2,000 was good enough for them, so they're out. At the end of the day, not even close to the target yet, which is the other side of the range at this point on the short term. And it could have a very negative impact. Of course, it could take back everything on top of the green zone. God forbid the red zone leads to the green zone. That's only its job, right? So, I mean, what a nice hedge that could be, right? I don't know. Imagine we hold this line all the way up to the red zone. Oh, that would be brilliant. Now we know. It's like, yeah, well, the first line that's going to have to break in order for it to come down is going to have to be this line. It's impossible to ever get to this line without breaking it. So we know if we position ourselves for this line, yeah, that could be pretty good. At the end of the day, what if it wants to come off of the green zone and go to the red zone, or sorry, to the gold zone and go down more? What if it wants to actually hit a B point for once? Do you think we're closer to actually hitting the B point and not making, the same kind of consolidation, making it weaker, making the trend weaker? Do you think that these are signs that put us closer to the next test of the B point or farther away? I'm like, yeah, we're totally closer to testing B points than we are farther away from it. 100%. So just because we've been seeing something happen so much doesn't mean it's going to continue to happen. It means we're probably closer to the end. Just like anything else where you're like, hey, we've been running this track for a long time. Do you think you're getting closer to the beginning? No. Doesn't make any sense. I'm like, well, but people, their logic, it seems to be that, oh, when it's dumping, you better sell, so because it's going to dump more, right? I'm like, well, why does every bullish pattern involve falling action so that you can get in where it's low and sell where it's high? I'm like, you're not supposed to buy high and sell high like everybody seems to be comfortable doing. But I get this like repulsive like gut feeling in my stomach where it's hard for me to watch. It's like when you see somebody trying to pour gasoline on a fire. I mean, it's just like, geez, doesn't that ever freaking twist your stomach, Dangerous. But we're testing the gold bar from above. And we're about to be equal on this. It's just a very serious time when I can see that there's going to be a squeeze at a level where it's like, oh, this level's been so juicy for everyone for so long, and 3 of them are lining up. All of them failed. At the end of the day, it literally has a red zone that's pretty significantly far away. What about the old 61? Wouldn't that be interesting? Wouldn't that be interesting if I took a fib from the low to the high of this green zone and red zone, and we saw that the 61 got a response? Don't you think that would be interesting? It would really be shining its colors on exactly, oh, sorry, I drew that upside down. On exactly where that 61 would be. That would be right here. I've noticed that the 300 can lead back to the 261 a lot too, but we'll see. That'll be well into that other range. The 61 of the old move is right there, and that's an abstract fib set. Who the hell's going to have that on? You're going to have awareness of 2 years ago when it was doing at this level in order to be able to get that. So it's the price of color coding the analysis and having the understanding in the future, because I knew that putting the work in and drawing the particulars of this range and highlighting them with a color coded theme that I understand that gives me information on this area from the past, invaluable. Like it's like absolutely insane how this has happened. Invaluable. Really, 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 really nice. You can see that it's stepping on top of the otherwise resistance barriers to Try and make this move as even as the past two. Now remember, we've made 3 advancements, 3 of them going up. 2 of them have been counter trend moves, right? That we've had? And I circled them. So what is 3 upwards moves with 2 counter trend moves? It's a 5-wave move, as we usually know it. 1 upwards move, and then the counter trend move, another upwards move, then the counter trend move, then another upwards move. Is a 5-wave move. We've got 2 counter trend moves like that, right? And then 3 upwards moves, right? So that's our components there, right? Two counter trend moves and 3 upwards moves. We've got 1 upwards move, 1 counter trend move, 1 upwards move, 1 counter trend move, and 1 upwards move. Just like this. This move has been the same, this one, and this one. It's impressive, very impressive. you can see that the yellow broke like crap. Let's see what the green has to offer. Like I said, it'll offer more value to those exposed to it than the yellow did for them. In fact, what the yellow had to offer wasn't very nice at all. They're making people really fight for that, which is funny because obviously anybody that is already exposed doesn't have to fight for anything, but making it dirty for the people who want the short, and they're going to stop them out shortly. It looks like this amount of people have shorted it. They seem to all have piled in around the 261 too. You can see that the volume really decays. outside of that area. We do have to consider the centralization for the imbalance, and this is a pretty controversial place to do that. After all, with it being a reversal level, where you know that this level right here, it has to do with this B point here. So the repercussions of that level having broken the trend is typically to get it back to here. That's just a good awareness to be, that's majority of all of the movement today, right? So aware of that. What could be the value of breaking the red yellow line off of a level like that then? Does it provide danger? Oh, it sure does. And there's time there. So we have to understand the imbalance can increase the volatility to the point where that could influence the trend to break. There's a risk that that happens. Now, it doesn't change the idea of it getting back from the gold zone, or sorry, the green zone to the gold zone, but it's just something to be aware of, because it is true that those are variables in this situation. They can be accepted or neglected. Good to understand that they're something that we can expect volatility, or something that can increase volatility. I also find it rather intriguing that we managed to go 1, 2, 3, 5, and then come all back to the and not manage through it. Because we do that in this trend. People from this trend will remember that that's a thing. It's not anywhere that we can see today or the last session or the session before that, but generally it's been a method of movement. So we've been up here, like take a look at this, since 2, 5, and stays like hanging around the 4th and the 5th, like it didn't come through. Basically, it's been using this area as a support. It's done pretty good about that. See, it'll happen in other environments too, maybe tonight. Particularly when it's in upwards movements. Climbing up on short term like this. Back, so like come back to the advancing. That was the relationship with that gold bar when it first, responded to it again, from since not seeing it for 2 years. You can see it was turned into support and resistance multiple times before. And a lot of the baseline for pretty much every single one of the moves that had significance was off of that level. Kind of interesting. Seconds? This is a centralization for the imbalance if I've ever seen it, which is acceptable. The spike that we had on the top of the gold zone may be seen on the bottom eventually in time, so no stops are safe in its path of making this spike on the bottom. And it doesn't have to happen now, but it can happen later just to make up for the fact that it hasn't done this on the other side. Which could happen. I wonder if it's matching this. So like what we did away from that bar was that distance when we first associated with it. And then when we associated with it next, we chose to do the same distance that we were away from that level. I find that interesting because that is the distance roughly of the level itself. You can see the majority of the volume contained within the gold bar itself. Now, that's interesting because I get this very much like they're rounding them up again just to take their positions away from them kind of thing. I wouldn't suspect anything but that. So literally everybody that's short right now, I do think that they're going to try and get a bunch of people short at a 261, have them wait a few minutes, stop them out, and on their stops acquire their positions as hedges for the overnight session. There's no better play, so I wonder, will they do it? We'll see. So it's on the spike itself that provides the liquidity to acquire the hedge, and the hedge could be off of that green zone, because anybody that has a position that's short right now may decide to put their stop at the high, which is very close to the green zone itself. And a little bit of a jab against the trend break can sometimes convince a lot of people that they've missed the reversal, and they pile in assuming that first dip is going to be the last, and the retest comes and gets them quickly. But it's not uncommon lately for everybody to work for something that's literally just to be taken from them. And I can see that even with the last consolidation. The whole idea is the consolidation runs into a barrier and everybody shorts the barrier and it loses momentum off the barrier, and then it breaks the barrier up in the wrong direction and takes everyone's money. I'm like, well, that seems to be the case with a lot of these consolidations today. At least they've been counter trend moves, and the move that we're making right now is smaller than any other counter trend move we've been making. And you could say the overall move was roughly the same size with the big spike and stuff, but this little tight consolidation, it's a little tighter than usual, I think. And that's fine. Because you know what's interesting is if you look at the days as on the daily lows, where it would go down hard and then it would grind and grind and grind, then it would go up. It's funny that when it goes up hard and then it grinds, it doesn't go down, it continues to go up. And that's the interesting part, because it wasn't always like this. It came out of an environment where the grinds did mean reversals. But now, today, there hasn't been a single one that actually has, so they've all led to continuations. Any pullback has just been merely to a fourth wave. Now what's funny is the big POC down below is very much like a fourth wave of today. So I wonder if it is ever going to get seen and if we see it overnight. It's so interesting. I just thought of something. I was like, well, you know, what it could be compared to is a profession where you could imagine there could be a stream of lava, like burning hot lava, right? And it's got gems in it, like golden nuggets and gems of very high value. And you could say that it was somebody's job to have a strategy to get the gems out of the lava. And at the end of the day, many people will tell you it's impossible, you know. And at the end of the day, you know that there's not going to be any consistency in the face of danger if you don't have a strategy. So there has to be a method to understanding that there's different sized gems, different weight gems, different gems altogether that you can get out of that river. But if you do it wrong, it's dangerous, and it has to be done with absolute methodical strategic method. And that doesn't mean one thing over and over again, because that's what people like. I think some people interpret that as one strategy, which is really interesting. Because one strategy might be good for one move, one trend, one channel, but when things change, one strategy is not good. Because how does one strategy adapt to change? If that strategy is undeniably changed, don't the results change as well for the people associated with the strategy? If they expect the same thing over and over and over again from the same fluctuation in the market, like a W or an M or a double bottom, like we were talking about earlier, like double bottoms can create 5-wave moves and double bottoms can also create Ws. Well, why put your money on something that can be two things, and that when it is one of those two things, it can either play out to the specified target, and it's not a maybe. It's there's one way those targets are supposed to hit, one way that pattern's supposed to work, but that pattern can become two things. So why is that pattern attractive? Like why how could it be attractive? Well, it's not to say that two highs aren't going to ever be attractive, but just the sake of it making two highs or two lows is not good enough, you know. Because that's one pattern that I think fails more than any other pattern is double bottom and double top. And it's probably one of the first patterns that people find because they think that it'll make it easier for them if they understand it. And to a certain extent, it's a start, but it can't be the end. Because how are you supposed to ever learn about a 5-wave move in a W if you don't ever go through that process? Well, undeniably, you're going to be analyzing an H whether you know it or not if you're looking at a W, because you can't make a W without making an H. That's the funny part about it. Whether you like it or not, really, it's mathematically impossible to make a W without forming the H part. So it's like, it might look a little funny here and there and so on, but undeniably, it has a sequence of, like, the downwards move, the upwards move, the downwards move, and the upwards move. That's the W. And imbalance in less than a minute. Now we've retested this green line. However, imbalance is right around the corner. Let's see if we can make things even and end up right back where we started, ultimately to hit the green zone after all this shenanigans. I find that the red-yellow line, in the event that it breaks from here, it's subject to being a fake break as well. So, of course, if any hedges have been acquired, ensure that they are safe by this point. So we can take off the marker. Any movement that we have off the imbalance is subject to being taken back as quickly as it forms. I would say that we're pushing the distance of equality out of both sides of the gold bar at this point. A new trend has formed. The old one. Significance drastically. And with 10 minutes to the close, it would seem the people that look at it as take it with face value is the fact that we've come up to the 261, grinded the crap out of it, made a node on it, and have progressed more into a counter trend move than we ever have since the beginning of the trend. Still roughly contained within the same distance that we're accustomed to using so far. A little bit more as we jab into one of the most recently created gaps. Deja vu in the morning, though, I must say. Is it not true that out of all of the B points that we've left in the morning, is there not a gap here? And do these B points down here not remind us of the ones that sit on the bottom of this gap, and the ones that sit on the bottom of this gap, and the ones that sit on the bottom of this gap, and the ones that sit on the bottom of that gap? I'm like, yeah, dude, they all have gaps. For sure. For sure. And they all have B points. That's been a way of this trend. What are the odds we hit one? What does that mean? At the end of the day, it would mean that there has been a change significant enough to break the chain that we've been using the entire time that we've gotten here. What a better place to threaten it than the entire trend break. Obviously, I do think that something is wrong with it, but its ability to break, and I think that we're going to see that at the close here. It offers a little bit of relief at the close for those that shorted the fifth wave. We've managed to come back to where again? There was two major pullbacks in this, and they were the same size, split between three moves. One, and then the counter trend move, and then two, and then the counter trend move, and then three, the 5-wave move. Comes back to the fourth, which is the second counter trend move. Out of three upwards gyrations that are exactly the same size, we've managed to return back, well, almost to the fourth wave. Now, of course, this is common. And what's intriguing about it is it did not make the same distance as it was accustomed to making before turning around. Because of the 261s, we could say, perhaps. But the red-yellow line ironically shifts from here. As that trend is broken, it is of no significance. Only good for retesting. This is the new red-yellow line. No progress for any more of the core will be seen until that line breaks, so it undeniably is the most important trend. Getting to it's the first step in breaking, and I was to say if we were to get that trend before the close, it's more likely to go into a sideways movement than anything. We shall see what they do with the close. Like I said, anything on the imbalance that sold off is subject to being bought back up as quickly as it was sold off, so curious to see what it does with the trend break that it has in the short term. The close, 5 minutes. And you know, I question the next pullback too, like this one, being the same size as this one, same size as our average triangle perhaps, but doing that could be a 5-wave move of its own, and that could threaten the break of the trend on the 5th wave. The 4th wave you do have to watch out for though. And I'd be curious to see how it breaks the 5-wave move up if it can only make it to the 4th on the way down. So if it can go up and get through this level, that would be intriguing because we haven't seen it go through this level until here. The B points are hitting for the first time. And every seller that there is in this area is subject to being turned into a buyer in the pre-market or in the after-hours session. But what it could do as well is be setting up the B point to what could look like an M in the future. Of course, overnight it's going to leave with plenty of time to make sideways moves and develop nodes and so on. It is the case that we are inside of this range, and for it to be used overnight could very well be on the table. To get into this little range and use that overnight as well is something I'm personally interested in. So that B point's cleared, but you know, it came down, like leaving B points. So it insinuates that the way that it left may not have the structure to maintain the downwards move for long. Yeah, it's got some time with the red-yellow line, but better use it or it's going to lose it. And it's going to lose it. Now, another thing that I find intriguing about this environment is if it chooses to make a consolidation on top of this level. If it chooses to make that consolidation on top of that level. We've been doing this. It's not the best pattern in the world, but it happens. So I'm like, you know, kind of like what happened here. Do you see that this consolidation kind of made itself again over on top of itself? It tried almost that kind of crap, essentially, we can see, because it's not really good for anybody. You know, well, God forbid you think it's going to do something else. That would make, you know, when it goes sideways, when you think it's going to do something, it takes energy. At least for me, it does. You know, if you're expecting it to make a move and then instead it does this, it's a drag, right? You're just watching and watching and watching and waiting, and it doesn't do the move that you want it to. It's not ideal. But this kind of move right here, I think it's meant to create sellers out of the people that are uneasy of holding through the night. Like they're literally a little bit of a dip at the end of the day on top of their profits. Most people will fold. Most people. You just see it, can't you? So that's like obviously the play right now. Couple minutes till the close here, of course. The green zone hasn't had a chance to come back to the gold yet, but that does not change. Definitely not. Ah, yes, and of course one thing that's really interesting to me is if we were to look at the distance between the red zone and here, I'm not saying it has to reverse here, but I'm just saying it felt an interesting level. Because this move is our standardized move. How much we've been moving when we go up. How much we've been moving when we go up. Roughly. Give or take a few points, that could mean the red zone. I'm intrigued with that. Now, of course, the entirety of the fifth wave was returned to the fourth. The initial move at the end of the day there we can see is a positive one that suggests everything to be bought back up to the gold bar shortly after the close. But with that being said, hopefully you guys had a wonderful day, and I'll catch you guys later.
Sounds good, John. Appreciate it.
Yeah, have a good one.
guys.
Take it easy, guys.